With our trades, Jeff Kilburg is here. He's KKM Financial's founder and CEO and a CNBC contributor. Jeff, welcome. And I can't imagine you get a lot of requests to talk about Portillos. Maybe I'm wrong, though. What do you think about the stock so far this year?
Well, I am very biased, Kelly. Here I am, a Chicagoan.
Oh,
I've had a couple burgers and a couple hot dogs from Portillos, and their chocolate cake is absolutely absurd. But what's fascinating about Portillos, it's right back where it was, its IPO. And if we really rewind, Kelly, the Oracle, we're going to be talking about the Oracle all weekend here out in Omaha, but the Oracle actually bought Portillos, the namesake, back in 2014, and then they spun it out. So here we are with a micro cap name. I know this is a tiny name, but here's an opportunity. Look at the congruent line that Shake Shack took. Shake Shack, when it had its IPO, it was about 60, 65 stores. Now it's about 450 stores. So the plan here is to see Portillos develop into a 600-unit facility. Right now, they're at about 65 units as well. So I'm a buyer here, but I think you have to be considerate that this was trading at $54 just back in November of 2021. So it's had a fall from grace, but this is a tasty opportunity to dive into a very, very high beta microcap.
Still a 57 PE, and how do people who are buying it now make sure that they're going to buy a stock that does well over the next couple of years? I mean, kind of Chipotle-esque. What do they have to do to actually be that strong of an investment?
They have to execute. I think you bring up a great point, and that's why if you look at Shake Shack and how Shake Shack actually rolled out their plan and execute. So here's Shake Shack at 460 stores. You're going to see a very similar situation with Portillos. Portillos is a different offering, though. Everyone loves burgers. Everyone loves Italian beef and sausage here in Chicago, and I think that's going to be widespread across the country. But Portillos has the opportunity to move higher, but this is a volatile stock, so I warn people, be careful when you're coming in here. This is the first day it had an IPO, Kelly. It went from $20 up to $30, up to $54, and then fell from grace. But I think this makes sense. If the Oracle liked it in 2014, Kelly, you got to like it in 2023.
I know. Their food is such comfort food in a way. You're right. It's delicious. But I'm like, Chicago January comfort food is very different from Atlanta in February. You know, we'll see if it translates. Let's move along here and talk about our next one, Choice Hotels, the parent company of Comfort and Quality Inns. It's up 15% this year as demand is strong for budget-friendly hotel brands. We'll talk to CEO Pat Pacious on Tuesday. Last time, Kilburg, he talked about how infrastructure demand was creating a huge increase in demand at his hotels for people who are working on those projects week to week. So I wonder if that'll still be a theme, or is the slowing macro going to start to set in?
I don't see the slowing macro. I've been traveling all over the country, and I'm continuing to see more and more personal travel as well as business travel pick up. So if you look at Marriott, we talked a little bit about Marriott earlier. From a 5-year perspective, Choice Hotels has outperformed. And I know it's 1/10 the size of Marriott. This is a $6 billion market cap company, but I think you can be a buyer here. And you've seen upgrades and downgrades, right? You've seen Morgan Stanley downgrade to 130. You've seen Truist upgrade to 130. So I think it makes sense that this is going to move higher here. But you have to understand, of the 628,000 rooms it owns, and compare or in contrast to Marriott's 1.5 million rooms, about 30% is that brand. So it's a little lower end brand. I'm not afraid to stay in a Comfort Inn, Kelly. But nonetheless, I think you're going to see continued robust travel, and that's going to put wind in the sails here.
I think we'll probably also talk to him about, the income distribution. How are people doing, right? Last June, interestingly, because gasoline prices were so high, you really saw that pinch, the lower distribution of the income spectrum. You fast forward a year, prices are lower. They're not way down, but obviously job growth is slowing too. So it'll be interesting to hear what he says about that dynamic.
For sure, and I think you have to really understand there's been an elongated reopening. So when people are talking about where they're going to spend their money in the face of this really high inflation, which of course is coming down, they're talking about taking trips. So that's why I think you're going to see the whole hotel industry. So you can own Marriott as well as Choice here, but I think if you look at the opportunity year to date, there's going to be an opportunity for a mean reversion, and that's where Choice Hotels has the ability to go higher.
All right, that's 2 out of 3. The last one is Primerica, Jeff, the financial products company. It's also up nearly 30% this year. Strong demand for life insurance and investment products. CEO Glenn Williams will be here on Tuesday after they report on Monday night. Right now, so much focus on financials and the way that bonds. We know insurance has been a strong performer, but talk to me about whether this is a stock that jumps out to you for the rest of the year.
I think if you own it, you have to hold it here, Kelly, but I would not establish a new position. When you talk about financials, and this is very different, you hear the word regional bank, people get shivers. And this has been very insulated from the regional bank. I'm not going to say crisis, but the regional bank chaos. But I think when you look at a name like this, if you have the opportunity, it's this close to its 52-week high, maybe you trim, maybe you take a little bit of profits. but I get really nervous about where it is technically at the 50-day moving average. Maybe it goes back down to that 20-day moving average, which is down at 148. But I think it does a very good job. This almost seems like utility, the way they continue to make money year after year if you go back and forth. Look at that. But I think with the whole financial industry, I think there's other opportunities inside of financials versus something in Primerica, which has done a great job and delivered. So up, 25, 30% year to date. I want to take profits or hold to a certain extent, but I can't be a buyer here at this level.